able to watch it. Okay, so this is stock. You can analyze stock pairs, futures, crypto indices. Let me mute everybody. So if you want to talk, you can just unmute yourself. Economy. So all these things these are all different stuff you can trade. Actually, depends if your broker offers it. Now the broker, like we learned in during the basic the ebook, there are firms, institutions like that allows you that gives you access to trade the financial market. That's what brokers are. So if your broker offers this and all that, you can trade it as well. Crypto, this is Bitcoin. You can trade Bitcoin versus US dollar. I think I was analyzing this for some people, for some crypto traders some time back. So that's what TradingView offers you. So you just go to tradingview.com, open an account, then you sign in. You can see this, I already signed in here. So now once you sign in, what you need to do is to come to let me just go through it. Once you sign in, you come to products, and then where you want to navigate to is super chats. Super chat opens this up. Okay, so let me just start um here you have currencies. Like I said, you have different, you choose what you want to trade or what you want to analyze. No, we don't trade on this platform. Actually analyze. We trade with our MT4. So you want to analyze whatever pair you want to analyze, you just choose it, and that's it. We're going to be using Euro USD for our analysis, so I'll stick to Euro USD. So this is Euro USD. All right. Now the next thing on this is the time frame. This is what you call time frame. Here we have a time frame here. So this is a 1 minute, 5 minute, 15 minutes, 30 minutes, 1 hour, 4 hour, daily, weekly, and monthly. Now, what this simply means is, for example, we are on the 15 minutes. Okay, this is the 15 minutes time frame. What this means is every candlestick you see here, that's every one of these, it takes 15 minutes for it to form. If you go to the 4-hour time frame, every candlestick you see here takes 4 hours to form, 4 hours to form. Same with the weekly. Every candle you see here takes 1 week to form. Then the monthly, every candle you see here takes 1 month to form. So that's just what the time frame means. So now we have different kind of traders. We have people who are scalpers. Scalpers usually let me write that out. We have different kinds of traders and different that based on your personality, maybe your time. We have scalpers. Usually these people trade from 1 minute time frame to like let's say 1 minute to they trade within 1 minute to like sometimes 5 minutes, 5 minutes time frame. That what they usually use, just short time frame they use. Then we have the intraday traders. This one's usually all trades. They trade within from the 1 hour to like the 4 hour time frame. Sometimes, of course, it can maybe be a daily time frame they use. Then we have swing traders. Swing traders hold trades longer. Swing traders, their trades, they could hold their trades for some days. So they can use daily time frame. That's a daily time frame to maybe weekly time frame. These are swing traders. So take one trade and then they hold it. Then we have what we call position traders. So we have different kind of trade personalities. So it depends on which one you have to figure out what you want to do. I have people who are just scalpers. They just come to the market, bam, bam, bam. They just take some positions, take trades and close, and they're off. The intraday traders, they can look at the 1 hour to 4 hour daily time frame to make a decision and take their trade based on that analysis on that time frame, because each time frame is unique. Then position traders, this trade kind of traders, they usually hold their trade for weeks to years. The person who actually mentored me is a position trader. He usually takes his trade from a monthly time frame. He can hold his trade for as long as sometimes months and years. I was shocked. There was this particular trade, Euro USD. It took one time, I think from here, something like that. He was still holding it up to this, took it from here, this particular point. I mean, yeah, okay. Took it from this particular point and he held it up to this point. So he's a position trader. He holds trades for long. So he's actually a billionaire. He's a multi-millionaire in dollars. It doesn't even say how much he trades right now. So I think it's from, I don't really know the country, but I think it's from Pakistan or so. Is it Pakistan? I, I'll check his phone number. Really, he talks like those guys. They're very good trader. All right. So now, so depending on your time, so that means some people can say, "Oh, I don't have time for trading and all that." That's because they don't understand that they can actually trade sometimes even 1 minute, 5 minutes. That means you don't even need the whole day. You don't need 2 hours to trade. You don't need 10 hours. You don't need 1 week. You can actually trade within an hour in a day. You can trade within 10 minutes, within 15 minutes. So it depends on the kind of trader that you are. Okay, so now this is the time. So we've explained what time frame is. Okay, this one is just the candles, different kind of candles you can use, but just to be, everybody uses candlestick, this particular pattern. So these are just different ones you can, but this is what everybody uses. It's clearer and all that. Then we have on the left hand side, you're going to see, okay, let me take this off. Now we have indicators. Now there are indicators actually, they take it's more like historic price, what price has already done, the pattern that price forms, then the indicator will be able to tell you this might be a sell, this will be a buy and all that based on the price action, because price always repeats itself when it comes to forex. So we have different kind of indicators here. There's people that love to use indicators. We don't use indicators because we are pure price action traders. So we have different kind of indicators that are here that people can use. All right, so that's what we have here. Then over here, come to this side. This one you can take a snapshot, and then this one for replay. But this particular trading view is not, you can't do that here because it's not the premium subscription. We're not on premium subscription, just a free one. So you can actually replay past these things usually used for analysis and some things. Can replay some setups and see, okay, if I had taken this, if I had done this setup, if I had taken trade like this, what would have happened? They can replay it. Then you do your setup, then it plays back. Just fast forward, it plays this what price would do, and then if your setup would have played out. Okay, so now here we have the, okay, here you can publish trade ideas. If I want to publish trade ideas, I can publish trade ideas, record video idea and all that. Then here, these ones are not really so important, but let me just go through it. Here this first one is a watch list. These are the pairs I look at mostly. I look at Bitcoin sometimes, and I look at DXY. DXY is the dollar index, because the pair that I trade has USD, which is gold. So I have to look at the market direction of the dollar index. Dollar index uh, determines how the USD moves. So I have to check the DXY mostly to take a decision on gold. when I want to trade gold, take a decision on gold. So we look at the DXY, which is the dollar index. For now, all you just have to know is just okay, we've not really gone there. So I'm just giving an explanation. So that's it. So you can just watch this now. For a start, I always recommend people to stick to one pair, trade one pair, master that pair. In Forex, like someone used to always tell us, one pair can make you a millionaire. One pair can give you everything you need. You don't need to trade so many pairs to be profitable. You can stick to one pair and be very, very profitable with that pair. So there you have other stuff you can explore. I don't use anything here at all. I just use just this watch list, alerts and data window, blah, 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 and all that. So that's it. So now let's move on to the left-hand side. Left-hand side, we have this particular cross feature. You can take it across and it's just to maybe measure. For example, I want to look at the exact place, exact price I need or something. I can just move it around, just move it around. Okay, here. All right, that's it. I don't use all these ones really. So I just focus on the main thing that you need. This arrow, like I just use this arrow, can be used for just used to point something. Maybe you want to put some annotations on your chart. This is the fib retracement. Fib retracement. Well, I think I'm going to have a this thing for this to show how this works. And actually, what people use this for actually is just to it measures the retracement of pairs. Fibonacci measure the retracement. People use it for entries. They also use it for exits and to know how deep the pair is going to retrace. Let me take this off. Since my stuff is frozen, just a minute. Okay, my stuff is frozen. I don't know. Let me just wait. I think something is on this for my system. Okay, it's back. So they can use to know how this thing is lagging. Let me give you some time. So the fib retracement is used to measure how the retracement of pairs, like when a particular pair moves to a certain direction, you can pull up your Fibonacci and then place it. There are some key levels that usually, based on historic data, that market will always retrace to. To always retrace there. So that's what this particular um, that's what this particular Fibonacci is for. Now I have some it doesn't come like this. I have some levels already put there. We're going to talk about this when it's time for this. So we have usually when you measure your Fibonacci, these are the key levels people take trades from 0.62, 0.71, 0.795. Okay, and then stop loss usually put below the one level, that's on that one. So that's also another feature we'll look at. Then we have this other one, just brush, rectangle. Use rectangle a lot. Use rectangle for our zones. You can customize. Once you draw it, you see some tools here that you can use to customize yours. You can fill it with any color you want. You can make it thicker. Whatever you want to do, you can just do it. So once you draw the rectangle, you can customize it anyhow you want. So we have this text annotation tools, text, you can write price label, all this stuff. You can use it on your chart to make remarks and all that. Then this one, I don't use it at all. It has some patterns. This one, okay, this one is used to show positions. For example, I want to buy, I can just put this, and then this red line represents my stop loss, where I'm going to put my stop loss. And then also this green part represents profit area. So if, for example, I'm analyzing gold, I'm expecting gold to come here I want to take a trade. This is just for chart annotation as well. I can put this here. So this shows that when price comes here, this is I'm going to be looking to enter I'm going to be looking at entering the trade from here. And then I'm going to put my stop loss here. So that's what it means. And then my take profit can be anywhere here. But this might be my target because, of course, the market is not just, there's no like definite, oh, price must be at 194, 207 this. No, no, no. Sometimes price can just come within the zone. You understand? And then you're okay, you can take your profit. So we have all right here is just to take profit as a profit zone for this particular um stuff. So that's a long position. We also have this one. There's also a short position for a sell. If you want to sell, that's just the reverse. Same thing and all that. So that's what this particular one is for. Which other tool do we use? We use the trend line as well. We have a trend line. We use the trend line a lot. This is trend line 2. Use this one. Then horizontal line, yeah, we use this one sometimes. Then horizontal ray, we use this one sometimes as well to mark maybe target areas and all that. So depending on what you want to use it for. So these are just the basic things, the basic tools we use. So you don't need to, okay, this is ruler. We use this one sometimes to measure pips. Just click on it and just drag it up. It's going to measure pips. Okay, so now pips are very important. We're going to also talk about pips today. And then I'll show, for those of us that are new, I'll show a simple way to calculate pips, even though that was also in the ebook. So we're just going to see it, do a practical class now, so I will see those that understand it. So pips. Any other case, zoom, you want to zoom in. This is the zoom tool, and all that. So choose Z, take it back. Okay, so these are the basic tools for trading view. So you can just go, you can explore and then see what you want to use. Okay, so for this particular, like I said, we're going to be using Euro USD. Let me click on it. Let me check Euro USD for our class. So let me start by talking about pips, because it's also part of the basic class, the basic course. Very important because Forex is just all about pips. If you lose pips, the number of pips you lose determines the amount you are going to lose, and the number of pips you gain determine the amount you're going to gain. So we're also going to just do a review of how pips translate to money in Forex. Okay. Now this is a free version. I think someone is doing on my, is it me or wait, let me cancel this. We're also going to talk about what was I saying just now? The last one I said. I think how
Talking about
pips,
pips.
okay, how it translates to money in Forex. Yes. So now let's do a review of that particular topic. What is pip and what is lot? So let's see a practical view. Now we have Euro USD. Now let me do a practical one so that will calculate it. I will know those who really went through that book. This green line, is it coming from me? Wait, let me see. Why can't I remove drawings? It's from the screen, I think. Well, but it's not from me. I think someone drew it. Let me check. It is coming. I see someone is drawing on the screen. This one is not for me at all. Okay. So let me get back here because this is the one that's saved. Okay, I was saying this is the free version for Zoom. So in case it goes off, maybe 45 minutes, we're going to log back in. So let's talk about pips now. Euro USD, for pips, we need, let me do a buy and sell scenario so that we can calculate the pips and do a practical class now.
No, I'm not want to hear your voice. Nobody's sleeping.
Hello.
Welcome.
Okay, sorry, I
Okay,
think
you're
my
welcome back.
okay, sir, my network
Okay,
was kind of
okay. I just want to be
fluctuating.
sure that we're all following you.
Okay, sir.
Mr. Fide,
I'm yes, sir.
and please, because if you sleep on your bed and be watching or listening, you may tend to sleep. It's better you sit up, because this is very important. Thank you so much. Go ahead.
Okay. So now let's calculate pips. Now let's say I want to buy, this is Euro USD. Let's say I'm buying Euro USD. My entry price is 1.07886. My take profit, which is also from time to time you see that we use something we're going to call TP. And then stop loss is what we refer to as SL. So in case we start taking trades, you see all these short forms, you know what it's for. Then take profit is 1.07960. Then my stop loss. Okay, we just need this one for now. Let me forget about stop loss. Okay, so now so I entered a trade. Now this is our practical class. Now I entered a trade at one. If you're not new to Forex, please don't answer. Let those who are new answer this because it's part of it was in the book. And I know they will not really understand it until they see it live. But if you read it, you'll be able to have an idea on how to calculate it. So I entered Euro USD at 1.07886, and then I took profit at 1.07960. What would be my take profit? So what's the pips? What's the pip? What's my profit? That's the pip, the number of pips I gained. Let's say of course we're not talking about stop loss now, where the trade is in profit and I entered at 1.0 this. What is the pip gain for this particular trade that I took? What's the pip gain? Sister Phil, what's the pip gain? Did you go through the ebook? Can you calculate pips?
No.
You can't calculate pips. But did you read the ebook? Did you go through the book? The
Yes,
PDF?
I did.
Did you see the part for pips?
Yes, I did.
Okay. So, okay, now this is a very simple way to calculate it. Now, what we need to do is just to subtract. So let's do it together. So subtract the smaller one from the bigger one.
From the table.
So what's the value? That means we're subtracting 1.07960. Sorry, yeah, 1.07886 from 1.07960. 1.7960 is 1.07960 is bigger because we're talking about take profit. That means that we are buying, the market is going up. For our selling, it will be the other way around.
So you get 0.00074.
0.0074.
0.074.
Okay, so now this is what we got. This is not the pip gain. This is actually pip gain, but this is not, the pip is not 0.0074. What we are going to do is, let me put that here. How the simple way to calculate pips is after getting this. Now, we have two kinds of pairs. We have these pairs that have like 4 or 5 units after the decimal. Then we have another type of pair like USD JPY, GBP JPY that have just like 2 or 3 after the decimal point, like you can see here. This one has 140.213. All right, this one has 3. So now there are 2 ways to calculate it. For this particular one that has 4 or sometimes 5, depending on the broker, 5 after the decimal point, what we do is you take you just count four places, just move the decimal point 4 places. So I'll move it here 1, 2, 3, 4. So put the decimal point here. The full value behind the decimal right now is now your pip. So the pip gain is going to be 74.
Okay.
If you don't understand, I can take it again. You can let me know. If the pip gain is going to be 74. So for pairs that have 4
Please take it
decimal,
again, man, please.
for pairs that have 4 or 5 digits, or is it digit or number, whichever, after the decimal point, what you do, once you do your calculation, you subtract it. You want to find the number of pips. Once you subtract it, you just slide your decimal point 4 places to the right. 4, 1, 2, 3, 4. Then the whole number in front becomes your pip. So in this case, the whole number here, after sliding this, is going to be here. The whole number here is 74. Is that clear?
Yeah, it's clear, man.
Okay, so if we want to look at, okay, we want to sell, because if we are selling, we are like, okay, let me put this particular, I think I should use this one. This one will be better now. Let me use this short position now, because it just showed the value instant. Okay, now this is Euro USD now. We are selling. Okay, let's say we are selling. Now look at your right. You see some highlighted stuff here, red, blue, green. That shows you the three figures this represent. So for this particular one, we are selling. Okay, so our stop loss is at 1.07. This one, 1.07959. Our entry price, we entered here. This is the entry. Entry price is here, 1.07914. So 1.07914 is our entry price. We want to know the number of people are going to use it as our stop loss. Okay, so 1.07914, one calculate number of pips, our stop loss is 1.07914 and 1.07959. This time around, we are going to subtract. Okay, the entry price is the bigger, is the smaller number in this case. So what's the value if you subtract 1.07914 from 1.07959? What's the value we get? What's the value we get? We're subtracting 1.07914 from 1.07959. Can someone tell us what's the value?
0.6324.
0.6324. Okay. So now, are you sure 0.6 or 0.06?